Good morning and happy Tuesday. It is March 4th, and this continues to be an exciting, crazy market time for the world of crypto. We've seen recent gyrations in the crypto market. We've seen an announcement about a crypto strategic reserve, and we see growth in the payment space. Quickly to talk about this, there seems to be a split between the world of Bitcoin Maxis, who seem to believe that the only asset worth keeping in any sort of reserve is Bitcoin. Their argument is it's the only truly decentralized one with no foundations or corporations running them. That's obviously true from a hard money standpoint, but also brings up a bit of a question as to what is the purpose of a strategic crypto reserve. I actually support the administration's efforts here. I think it's important to include a variety of cryptos because I think they all serve a different purpose. Bitcoin's purpose is very straightforward as the digital gold that is automatically deflationary because of the halving every 4 years and eventually running out and fees and a lot of long-term holdings. There's a lot of reason to believe that Bitcoin is the most likely to hold value and increase in value over time. The gyrations between highs and lows should hopefully kind of stabilize as the boom bust cycle goes away, as ETFs and institutions hold pieces, things like that. So I think that having a large crypto reserve in Bitcoin makes a lot of sense. And I think it makes a lot of sense from a strategic point of view, as well as from a dollar dominance point of view. Many of the beliefs is that Tether, in part, is able to make money because not only does it buy treasuries to backstop their currency, and we'll get to that in a little bit, but they also use a large Bitcoin reserve, which gives them long-term profitability, even if it has short-term gyrations. That said, let's talk about the other ones in there. ETH, XRP, ADA, and Solana. Solana, quite frankly, it's the new hotness in payments. It's a dirt cheap L1. It runs very similar to EVM, the model underlying Ethereum. Makes it relatively easy for developers to integrate with it. We've had ours built out for quite a bit. The main holdup for us on Solana is actually upstream data providers, just because it's a little less stable. It's a little newer of a network. It needs some time to mature. But I think there's very good reason to believe that Solana will overtake Ethereum in certain niche areas. Because really it's going to come down to, are you doing payments on Base, the Coinbase sponsor network rolling up to Ethereum, or Solana? And I think there's a very good claim to wanting to simplify it because Ethereum's gotten complicated for users. So we'll see what happens. Now let's talk about some of the other ones. XRP, I've stated before, it is my belief that Ripple and XRP are best positioned to be the new interinstitutional payment rails for banks and financial institutions. They have the relations with groups like the Fed, the FDIC, and other regulators. So I think it's and they have a lot of features. The stuff that's included in the XRP ledger that gets dismissed out of hand by tech guys is that XRPL has put features that financial institutions would want into the ledger instead of counting them on smart contracts. The Ethereum idea is just record everything and let the smart contracts define it. XRP Ledger is a little more of a simple, straightforward network. It slowly evolved from a Bitcoin clone to a really internet institutional one. Bank of Japan just announced that they're using them for payments. So I think there's a lot of credibility towards XRP. That said, the biggest criticism is Ripple holds 60% of the XRP quantity. Any sort of deal where XRP becomes a standard might involve Ripple divesting it. And if Ripple's going to divest, I think it's probably important for the US government to maintain a large hold, because if we're going to use this for international settlements, you can't have countries like Russia and China able to buy up the supply. So a strategic reserve serves that purpose. Then you've got ADA. ADA is kind of the odd duck here, right? Ethereum makes sense. It's the granddaddy for stable coins, cryptocurrencies, tokens, everything else. Solana's hotness for payments. Where does Cardano come in? Cardano is one of the most interesting technology projects, and we're thrilled to be working with them through Project Catalyst. Cardano has the EUTXO model, which there's a lot of technical details behind it, but it takes some of the best of Bitcoin and the best of Ethereum and rolls them together. What do I mean by that? The UTXO model that's used by Bitcoin, Doge, Litecoin, and Dash says you create a master private key in your wallet. And from there, you create a series of public private keys for different wallets. And each transaction comes in on a different wallet. And you spend it all and you have change addresses. And behind the scenes, it's really complicated. But from a safety and security point of view, it makes it much harder for third parties to track what's going on. You can do it. BitRank Verify does it for us. You can make sure that you're not talking to someone secret, but it's way different than I go to Etherscan or Basescan and type in your wallet and see all your transactions. The other thing it lets you do is it makes it from an accounting and tracking point of view way easier. It basically, by having basically a temporary holding wallet for each inbound payment you receive, it makes it very easy if you're tracking this back to your general ledger and invoices to have a payment address that defines which invoice it is. XRPL, which is account based, doesn't have this problem because they have the ability to include a memo really in the transaction. Stellar also does this. ADA reminds the UTXO model that makes Bitcoin very powerful with the more flexible smart contract kind of structure allowing you to do tokens that makes Ethereum so popular. So it makes it a very interesting combo, and we think it's a really exciting model to look at. That said, it hasn't taken the market by storm, but it is the sixth largest cryptocurrency. So I think including it in the strategic reserve is important. Much of early ADA is held by a couple of large companies that built the network. Adding the Federal Reserve to that may make sense from a strategic point of view to make sure that US based interests are represented. So I think that the strategic crypto reserve, I think anyone that is complaining about it and it should be only Bitcoin only is looking at it in a very myopic, our whole purpose is to hold wealth. And a strategic reserve does more than that. Just like we have a strategic gold reserve, we have a strategic petroleum reserve. We have strategic helium reserve because 100 years ago that was part of warfare. It is very important that we make sure that as this becomes the avenue where data may exchange, business may take place, the US maintains a strategic interest in it. So I think there's a lot of things that make sense here. Last week, I was out at Eth Denver, which was super exciting, and a ton of people were responding there. I got to attend one of the side events. It was the B2B Payment Day, sponsored by Deloitte, Bitwave, Oracle, and Anchorage Digital. Deloitte's one of the big four accounting. Bitwave, a great company. We talk to them all the time. They're really focused on general ledger and ERP integration. Oracle NetSuite is great. Oracle's huge. NetSuite is their ERP package for medium-sized businesses. Seeing them here is important. Anchorage Digital is really focused on institutions and institutional holdings. And I think that this really was talking about how we make B2B payments. So this was an adults in the room kind of conversation, and I'm going to share some of my insights from there. That said, we are fundraising on Republic. We are a startup. We have some proof of concept applications in development or in the Salesforce App Exchange. We're really excited. Salesforce, for those of you who don't know, has 150,000 customers, including 91% of the Fortune 500. Web3 Enabler is the premier Salesforce ISV for building crypto, blockchain, and Web3 payments. So as this market matures and money is being spent bringing it into corporate systems, we expect to receive a substantial share of that revenue. So why are we raising money right now? Because that time is not yet now. So by raising from the community as a whole, we're able to limit how much we're controlled by venture capitalists, continuing to build crypto proper tools like a peer-to-peer payment system instead of going through gateways, and generally just grow the business organically. So we've got another week in the campaign. Our valuation at $7.5 million is set very generously to make sure that when we're successful, everyone that invests can make a whole lot of money. So I'm not going to tell you not to invest in certain coins. It makes a lot of sense to invest broadly in this area. But if you're looking for a picks and shovels play, a company that's going to make money no matter which coins win and which tokens win, we think Web3 Enabler should be a part of your startup portfolio. So go to republic.com/Web3 Enabler. So a lot of news was made. USDC, the regulated friendly stablecoin, and Tether, the internationally popular standard coin. Headlines were made that USDC just overtook Tether in transaction volume, and that's huge because Circle's been big in the US. They've got a presence in Europe, but they're not as present in the rest of the world. Tron is extremely popular in LATAM, Africa, and the rest of Asia. So what does this mean? I'll be honest, I don't know. As an American, we've always treated Circle as the real play, with them having a lot more honesty and upfrontness about what they're doing. Tether seemed kind of a dodgy company that's doing whatever they're doing. That said, I had a great conversation with Dragonfly, and their comment was the rest of the world looks at it the other way. USDC is seen as too tied to the banking system, too tied to official exchange rates that don't reflect reality. And Tether has been here for years, letting them do payments dirt cheap on Tron. USDC was on Ethereum and a couple other networks, but it's only recently with Base and Solana that there's been a cheap way to move USDC around. That said, USDC and Circle have filed for are compliant with EU regulations. As the US has regulations, Circle and Ripple are the two companies talking about it, and Tether is kind of banned in Europe. So, how do we handle this at Web3 enabler? We support both. We've added support for the Tron network for tracking, and we support Tether on both Tron and Ethereum. We are struggling to work with upstream providers for off-ramping Tron Tether, but Ethereum Tether is pretty easy. We're working with Bridge, which is the Stripe company, for doing so, and we're going to keep adding on-ramp and off-ramp options. So if you're looking to expand your sales into Africa, LATAM, or Asia, which is a big selling proposition for Web3 Enabler, or you're looking to pay people overseas, support for Tether is important. If you're looking for things that tie to the banking, USDC is important. Mexico, Brazil, etc., they have like direct rails into their banking system for Circle. Tether lives entirely within a Tether economy. It's a little harder to on-ramp and off-ramp. That said, there are plenty of swapping platforms, and for the crypto native, it's easy to swap this. As we're building out tools, what we found is there's a lot of confusion. That's why we're really focused on on-ramps and off-ramps. So why are we so excited about the future? There's $150 trillion sent every year on global B2B payments. $150 trillion. The sheer magnitude of that is hard to comprehend. So that is why we are so focused on the enterprise and business-to-business transactions. And it is utterly critical that these aging infrastructures that are 30 to 50 years old are going to be replaced. Stable coins like Tether and Circle and Ripple's new coin and some of the others contributed 30 trillion in transactions last year. They are now starting to rival Visa and MasterCard's networks. Stable coins are real. They're exploding. They're more and more important. We have always been stablecoin centric. We absolutely support the UTXO model. We have Bitcoin, Doge, and Litecoin support within our system. But we think stable coins for B2B payments are the most logical way for companies to modernize their systems, cut costs, and just move faster. And with $30 trillion last year, with a 3x growth, I don't know that we'll hit 90 trillion this year, but I would expect us to hit 50 to 60 trillion. Stablecoin transactions are clearly the future. Now, people always ask me, well, why won't just Stripe add it? And they do, and they will. But Stripe is going to do it the way Stripe does. So one of the things with the payment economy is 35% of the revenue comes from doing what we do, access fees and connections. 65% of the revenue comes from transaction fees and holding their customers' funds for 2 or 3 days and getting the float. So it's not easy for an incumbent player like a Visa or MasterCard to pivot to the stablecoin model because it would cut their revenues by 2/3. And that would destroy their profitability. This is part of why you see it with Stripe. They're playing on both ends. They bought Bridge, who's a popular on-ramp, off-ramp API solution that payment players like we're using, so that they can still stay in the fee game. But adding it to their gateway, they're charging 2.5% for a credit card, 1.5% for a stable coin. That's easily 3x the fees of even off-ramping every transaction. And if you start to really go crypto native, you see it. So this is why when people are like, well, why wouldn't Stripe just add it? They will. But that's not going to change the fact that while that 1% may not matter for a $200 consumer sale, it's $2. That's a huge difference on a $20,000 international transaction, where 1% of that is, a couple $100. You're going to be doing that all day. And B2B sales are tighter margins, right? You're routinely operating with corporate manufacturers running on 4% margins. So 1% of the transaction is 25% of the potential profit. So that's why we believe there's real area where companies like ours doing peer-to-peer payments and bringing the software in are in a very strong position to bring the system forward. So if you agree with us and you think that that $30 trillion stablecoin transaction and this, $150 trillion market is interesting, then I want you to go take a look at us on republic.com/web3-enabler. What does that mean? We are the company that brings crypto payment and transactions to Salesforce, and we think that we're an important part of the strategic ecosystem. Salesforce is 91% of the Fortune 500, 30% of the total CRM business, but that doesn't even begin to explain that the 150,000 companies running it, a huge number of them are all in and running their business ops there. So we're excited. We're excited to work with companies like Accounting Seed and bring things forward. So you've got 1 week, republic.com/web3-enabler. If you've already invested in us, please increase your investment and let's see our raise close out strong and be ready for building more products in 2025. Thank you.